Ready, sir? I'm ready. I'm waiting. Good evening and welcome to the live virtual revisionary classes conducted by the Board of Studies Academics in the Institute of Chartered Accountants of India. Today, since this is a revisionary class, we would concentrate on the important questions, important topics, and also the exam questions related to these topics. So we'll be covering accounts of companies and also audit and auditors today. So some of you have already greeted on the chat box. We have Vaishali, Lokesh, and others who also have attended the live virtual classes. Nice that you are here and look forward to questions and suggestions. Since this was covered by me in the LVC also, let me see. The same people are here. This would be more of a revision for you, but it will be the same. There cannot be something new now, which I was not teaching at that time, right? But what I would suggest is raise questions which you think you have missed out in that session. Do raise it now. So, books of account to be kept by company, you are aware. Every company shall prepare books of account and other relevant books and papers and financial statement for every financial year. Okay. So, the idea is to explain the transactions affected by the company in an accurate and systematic manner. Importantly, the law now prescribes, it's now a prescription in the law, statutory. Books should be kept on accrual basis. On accrual basis. Sure, you are familiar with what that is. I should not presume that you are not aware of the meaning of the word, that you are not aware of the meaning of the word accrual. Okay. So books, in other words, the opposite of accrual basis is cash basis or receipt basis, where income and expenses are accounted on receipt basis, only when they are received, not at the time of incurring the expense or at the time of earning the income. So the internationally accepted accounting is accrual basis, where an income will be accounted at the time when it is earned. So when a sale takes place, when the transfer of goods in the specific mobile property is effected, at that point in time, even though the payment may not have received, I would not have received the invoice value, I will account the invoice. Same when I purchase goods or I enjoy a service or anything, when it becomes due, I will account it. So I've enjoyed it, including certain expenses where there is no invoice, even though once I have enjoyed the benefit during this period, even though I have not paid for it, I will account it as an expenditure on accrual basis. Very important concept. If this is not followed, the profit will not be correct. It will be wrong. And we cannot certify. So, books of accounts should be kept on accrual basis. Again, according to double entry system of accounting, an internationally acknowledged system of accounting, not part of any ancient Indian system. In India, we were continuously following only cash. So it needed the British to come into India to give us the mercantile system or double entry system of accounting, wherein for every debit, there is a corresponding and equal credit, thereby ensuring naturally it will tally the arithmetical accuracy. So if the balance sheet tallies, arithmetically the accounts are correct. Principle-wise, there may be errors, but arithmetically it is correct. Therefore, the books of accounts should be maintained according to double entry system, whether you are adopting the accounting equation route or the 3 rules of double entry, whatever you are applying, you should ensure that if there is an increase in the debit side, whether as an asset or as an expense, there should be a corresponding increase in the liability side, whether as a liability or as an income, or at least there should be a reduction in the debit side. Same for liability also. When there is a increase in the liability, automatically correspondingly there should be increase in asset, or at least a reduction in another liability, and so on and so forth. So whatever you are doing, there should be a double entry so that balance sheet will Tally. Now, this is basics for advanced students of accounting like you. But point you need to understand is before this was introduced in the Companies Act, not in the 13 Act, it was introduced as early as in the 56 Act itself. This had happened, which means now a board of directors or a management of a company cannot fully argue that we are not bound. Where does it say that we should maintain on double entry? You qualify, that is your problem. Today, the law makes it compulsory for the board of directors to maintain books on accrual basis according to double entry system of bookkeeping. Right now, so you might even think, some of you might even think, is this at all possible that any company would want to maintain on other than accrual basis? So here is the question from the exam itself. CAI Limited in its first year of incorporation maintained its books of account under single entry system. Friends, I'm sorry to say this, though this is a question figuring in the exam, there is nothing called single entry system. It is not as if double entry system opposite single entry system. There is no single entry system. The correct term to use is either cash system or preparation of accounts from incomplete records. This is how we used to learn it. When we were studying accountancy in those days, I don't know what they do nowadays, we used to be given certain data, and from that data, we will try to unravel the entire balance sheet and P&L and convert it into double entry. It used to be fun. Like, if you know the basic relationships, you will know that if you total up these two, that will be equal to that and all that sort of thing. So we will be given some information and will be asked to complete the whole accounts, financial accounts, and the double entry system. So single entry is not a correct. What they are trying to say is they will not follow double entry. They will maintain haphazard set of accounts. Whatever nonsense they do, that is called single entry system. That is wrong. That is not acceptable. Now they are asking it as a question in the exam. Is it permitted under the provisions of the Companies Act 2013? No. So you will just have to reproduce this. That's all. Section 128. It's now compulsory. Okay. State the person responsible for complying with the provisions. Now, if you remember, okay, let me ask you. Now that this is a revision class, I can be a little more, interactive. Rather, we can be a little more interactive. I need not teach you. You must be aware. Who are the persons responsible for complying with the provisions? Do you remember? Can you quickly summarize it in the chat box? Can you quickly summarize the persons who are responsible? Just even abbreviated is okay. No, not board of directors entirely. No. No, Mr. Nagaraj. Vague answer. Not correct. Under 128. CA and CS. Who is CA, madam? Who is CA? CS, at least I can understand the company secretary. Again, which company secretary? Not clear. This is a revision class, brothers and sisters. You can't have vague answers. You should be aware of the section. Provision. See, you people are all reading the institute material. When I am conducting the class, you are following it from the material only. How can you be so vague? You should know. In other words, penalty section you go. Who will be punished if this is not compliant? That is responsible. MD, WDD, CFO, then cost auditor. Hello, madam. Hello, Tayasumi. Cost audit has nothing to do with this. Cost auditor. Sir, auditor has nothing. The independent auditor is nothing. This is the board. See, board of directors could have been a right answer, but that is wrong. It is not the entire board. As rightly pointed out by Mr. Lokesh, it is MD. The director in charge of finance. Please be careful. Not WTD. Director in charge of finance. CFO. If all Jollyville is being or she is being paid salary to do this. And they are designated under the law. CFO. Any other person who has been charged by the board with the duty of maintaining books of account. It should be a specific board resolution charging such person. Okay, this is the correct answer. Friends, I'm happy that you're all here. But remember, this is a revision class, as in tirelessly going to keep on repeating. The level of knowledge you should have attained is expected to be higher. No more vague answers. Okay? No more vague answers. No more unthinking answers. Like cost audit, CA and CS. Siddhi, you have to clarify who are the CA and CS? So, why? Because, this is a simple question. It carries 3 marks. 1 mark only for that answering that single entry. Remaining 2 marks for the persons responsible. If you write it correctly, you get 2.5 marks. Straight away, take it home. Enjoy. Okay. So please, I will be asking you questions like this, which I will be expecting you to answer correctly. If not, at least near correctly. Is that okay? Do we have a contract, or as usual, are you going to be simply passive? No. Now I want you to be very active. So this is the definition of books of account from 2 subsection 13. Though it comes in preliminary chapter, I'm giving it here for the sake of the. Okay. No. So in this, okay, will you be tested on this? No. Will they ask you a question? Define books of account under the Companies Act? No. That type of question has stopped. The institute has stopped asking that type of direct theory question. Never. Impossible. What they are now going to ask you is application oriented. Okay, even this question that I showed you is slightly straightforward theory question. What they will ask you is they will give you a situation and ask you to address it. Okay, problem oriented. This is again very important. Books of accounts shall be prepared and kept at the registered office of the company, but they may be kept at such other place in India. Okay, as the board of directors may say. So question answer, if they are asking you, can the books of account be maintained at a place other than the registered office? Yes, provided it is in India. What is the procedure? Company should within 7 days thereof file with the register and notice in writing. Right. In case the company has a branch office, the books of account of that branch office may be kept at that office. But summarized returns giving the basics should be sent periodically to the company, right? To the company. Okay. So branches can have their own accounting. For example, when I was doing my CA, I was 1 year, 2 years I did articles. Then after finishing my intermediate, I still had little more than 1 year and 3 months. So around that time, I applied for companies, and I got an industrial trainee opportunity in a well-known insurance company called United India Insurance, where I spent 1 year there. One whole year I spent there as a trainee, intern trainee. I reported to some of the top chartered accountants who are now either very old or not, no more. But what I'm trying to tell you is one of my jobs was I was attached to division offices. Now these division offices in turn had branches. So my job was to sit in the branch and assist the assistant administrative officer who would be in charge of accounts there to prepare the branch accounts and also to prepare the returns. There used to be elaborate returns. AC5, I remember ACS5, ACS2, and then we had to reconcile them. All solid registers were there. So I used to prepare it, and my job was to prepare it. And in those days, no computers and all. We have to manually prepare it in printed sheets using calculator. We have to calculate, no computer. So we have to type it out, and I'll have to write it out and then show it to my boss. Boss will sign it, and then take it to division office manager will sign it. Then I'll take it to the head office. If it's a branch, I'll take it to the DO and give it to the DO, who will in turn summarize it and send it to the head office. This is for branches. So I used to do that at the branch level. I'm just giving you a practical example to help you understand how this happens. But later on, when you come to audit, you will understand. Branch auditor will audit the branch accounts. Need not be the statutory auditor. A branch can have its own auditor. So here is the question again. Yeah, let me see if there is any query. These chapter related some into chapter 8. Yeah, what is happening? This is Accounts of companies, sir. I don't know what chapter that is, ma. You will chapter 9 of the Companies Act, ma. Okay, are you clear? Chapter 9 of the Companies Act. Hmm? Your sentence itself, Mr. Now, see, now that we are in revisionary mode, I'm going to be a little more tough. Okay. Now, if you are going to write an examination, the words that you use should be crystal clear, grammatically correct. So, the sentence that has been written there is not clear. So, you will have to learn how to do that. If you want to get very high marks in law, a fairly good command of English language is required. Unless you're writing in Hindi, which is then no problem. But remember, any language needs a command. Just because it's mother tongue or just because it's vernacular doesn't mean that expressing thoughts is going to be easy. Believe me, if somebody cannot communicate clearly in one language, then lack of clarity will come in the other language also. Are you able to understand? Clarity is very important. Then use of language. So the clarity of thought enables you to select the words to be used in the answer. So first is clarity of thought. This is an important skill as a chartered accountant that you should have. Do not think that it is something that we are forcing you. No, sir. In your job as a future chartered accountant will involve drafting of replies, technical writing. Okay, so that is what is being tested by the institute in the exam. When I say technical writing, I mean any written document which explains the technical part of your work, which is in some cases income tax or GST or Companies Act for that matter. So the questions in the exam are mainly meant to understand whether you are able to express that knowledge in meaningful words in any language, either Hindi or in Tamil, or in English. It doesn't mean that it has to be in English only. Those of you who are fluent in Hindi should be fluent in Hindi. Okay, the clarity should be there in any language when you talk. I'm sorry to make this point very vehemently, because at this stage you should do that. No more pushing the blame outside. No. Now you have to take up the next 2 months. I should somehow improve my expression, my ability to write complete sentences in English. I should be able to write complete sentences in English, which are 80% grammatically correct. I mean, I'm not saying that you have to write spotless English, but I'm saying it should be complete sentences. Okay? Please don't take it otherwise. Rather, take it in the right spirit of being alerted to an important skill. See, suppose I wanted to become an engineer, one of the important skills that I would need is algebra knowledge. Now, suppose without understanding the basic principles of algebra, I get into mathematics, and then people will keep on telling me, Mr. Srikanth, you learn algebra and come. Without algebra, how you can learn advanced trigonometry or advanced calculus? So basic algebra is given. Similarly, in theory papers, basic use of language is given. Okay, if that is not there, that is going to become a problem in the exam. Okay, mugging up the entire material also, you should be able to express it there is very, very important. I know I'm being a little vehement here on this, but in good faith, I'm telling this thing. So please try to practice. It is not as difficult as you think it is. It needs application. It needs reading more. You have to read, and when you read a sentence, understand its structure, how that person has written it, and then try to reproduce it in your answer also. See here, BBQ Limited, with its registered office in Hyderabad, has 2 branch offices, one in Delhi and the other in London. The accounting transactions of the branches are recorded, and all books of account are maintained in the branches. The branch accountant of the Delhi branch sent monthly, and the branch accountant of London sent quarterly summarized trial balance, P&L account, and balance sheet to the Hyderabad office. One of these assistants of the audit team, which went to audit the company, raised the issue that the branches of the company maintain its books and records at branches. So it defaults on not maintaining proper books of account at the registered office. Mr. Naveen further objected to the fact that the London branch sent their summaries on quarterly instead of monthly. Whether these objections of Mr. Naveen relating to the place of maintaining, etc., are correct. Okay, we can try to think. Fairly simple questions, right? Okay, so you're giving answers. Q1 not valid. Agreed. Not valid. Got it, sir. Okay, now, so what do you think? What do you think? Is Mr. Naveen correct? No, because branch accounts can be maintained and kept at that office. Even foreign branch. Even a foreign branch. Please note, it's only the books of account of the company should be kept at the registered office or in India or any other place in India. The branch is abroad, it can be kept at the foreign branch office, no problem. And there is no prescribed time for giving returns. Nothing has been prescribed. So even quarterly is okay instead of monthly. Periodical is the only word used. Again, they are asking, see how many times they are repeating persons responsible. I see these are questions of past question papers. I have not given the actual year. If you go to science answer, you will get it. Believe me when I say that these have been regularly asked in the past. Okay. So persons responsible, I told you at that time, MD. Just don't put WTD without any continuation. Whole-time director in charge of finance. Chief Financial Officer. So, look, Mr. Lokesh gave correctly WTD, but he could have added IC, I.C, Fin, like that, in charge of finance. Chief Financial Officer. Any other person of a company charged by the board with duty of complying with the provisions of section 128. Any other person, not necessarily a chartered accountant, could be a non-chartered accountant also. So long as, obviously, if he's not qualified, you wouldn't do it. So who's qualified? No prescribed qualifications, but please, will you take a MBA marketing and ask him to maintain your books of account? If you do so, then that itself is offensive. If at all later there is a mismanagement complaint, the tribunal will agree, yes, such a board of director who is appointing an engineer or a non-finance person as a person in charge of accounts is guilty of gross negligence, like that then the board will become directly liable. But once you select a qualified person who is aware of who has got the necessary experience, and you charged him, the board has charged him, then the board, see, to that extent, the board's liability is relieved. Are you able to understand this, my dear ladies and gentlemen? See, the board of somebody wrote BOD, that is very wrong. For finance, for this chapter, the BOD, board of directors, can quietly step one step back. So long as they have put CFO, there is a whole-time director in charge of finance, or if, let us say, there is no WTD in charge of finance, no CFO, okay, no person has been charged, then MD will be liable, even though he may not be a chartered accountant, he may not know anything about accounts, because his fundamental responsibility to delegate to somebody who knows finance. He not having done that, he becomes liable, and he is the primary liability. Suppose the company has no MD also, then all the WTDs and the PTDs also, except independent directors, will be liable. Independent directors will not be liable because they have immunity. They have immunity. They are protected from any penalty under the law. So, if in case there is none of the three people, these three are there, then MD will become liable. If these three are not there, then MD. If MD is also not there, then the entire board, other than independent director, will be collectively liable. Another very interesting and important topic. Before that, let us see if you have any queries or. Mr. Nagaraj, you please stop asking questions which are out of context. When we come to financial statements part, you can repeat. And I'm insisting that you should write complete sentences. Are you able to understand? For example, suppose you're using Chat GPT. Should you not write should not the prompt, at the prompt, should you not write a complete sentence? Imagine that I am Chat GPT. You are asking me a question. If I don't understand, I can't answer. You have put send financial statements, send within 15 days. What is this about? What are you asking? There is no question mark there. Are you making a statement? Similarly, you put contravention 50K to 5 lakh. Why are you giving that information? It was not asked by me. Please, the class, I love to answer your queries, Nagaraja, but you will have to be, it has to be a query. A query has a question mark after it. When I'm asking a question, you give an answer. Okay, penalty have not yet come. I have not yet reached penalty part. We are still studying 128. When we come to penalty, we will discuss it. Okay. I hope you are able to understand what I'm saying. Okay. So the books of accounts shall be made, which is maintained in India, will be open for inspection by a director. So it's in India, na? So any director can come and inspect. Normally, this right, no director would actually come and ask for the books of account. They would rather prefer to rely on the MD or the WTD in charge of finance, or even the CFO for that matter. But suppose a director wants to look at the books of account, he cannot be denied. Why? Because he is part of the day-to-day management and is part of the management of the company. Therefore, he is entitled to see. But suppose the information is outside India, he cannot say, please give me airfare to go to Singapore and verify. No. Any copies of those accounts or books can be made available to him, produced to him. Okay. Any inspection by a director should be done during business hours at the registered place or such other place. Okay. When an inspection is made like this, the officers and other employees should give the person all assistance in connection with the employee. Inspection in respect of any subsidiary of the company shall be done only by the person authorized in this behalf by a resolution of the board of directors. Okay. Right. Good. Now, when a director is seeking financial information kept outside India, we should make a specific written request, not oral. Okay. The request for that financial information should be made by the director himself. This is with respect to information kept outside India. Inside India, no problem. You can even ask your power of attorney to come, your auditor to come and do it with a power of attorney or agent or representative. But if it is outside India, then the information should be, if it is inside India, he can walk in anytime and ask orally. But, or even over phone, he can inform that I'm going to come, please keep it ready. But if it is kept outside and he wants copies, he has to make specific written request. He should make. His power of attorney in India cannot make. Such financial information shall be provided within 15 days of receipt of it. This is regarding financial information kept outside India, right? In India, anytime during business hours, correct, at the registered place, orally also okay. He can just walk in. He can even appoint an agent to come and do it for him. So, one of the directors of Suryodaya Pharma has sent a request. You can read it and give me your answer. You can read it and give me your answer. In case you are finding it difficult to memorize from the book, these PowerPoint presentations have been shared now, already shared before this class. Also, during my regular lectures, the entire PPT has been shared. The entire content, not this is abridged content. The entire content has been shared. Go through that. See, boss, simple. Suryodaya Pharma Limited. He has sent a letter for inspection of books of account request. That's all. What is the law? This is one. That's all. 2, 3. That's it. You write these 3 sentences. That is the answer. Got it? So then you write these 3 sentences, then write the refusal by the CFO to provide access to the books of accounts that on the grounds that directly provided the quarterly summary is not correct. Okay? 2 marks take, you're getting it. Will your answer be different if the request is made by a shareholder? Yes, because shareholder does not have the right to demand inspection of books of account. So that, yes, my answer, or rather it is a shareholder does not have the right under the Companies Act to make request for inspection of books of account. Therefore, the answer would be that the CFO is correct. In case the request is made by a shareholder. Are you able to again and again see? My answer stated orally is a complete English sentence. Is a complete sentence in English. Are you able to understand? Right? So you will have to draft it. You may ask me, why am I keeping on repeating this? It's because many students spend a lot of time reading the institute material. We will appreciate them for that. Their hard work. I don't know, they're working hard. Nobody can question their hard work. They read the entire material, which also is not required. Only important areas need to be studied deeply. Others, you have to just give one revision, that's all. In the fortnight meeting, I even made that point. Not only me, all the experts who spoke that day made the point that you should concentrate on important areas. That is something you'll have to spend a little time on. Having said that, with even such a smart studying students, what they do now in the exam hall, if you're not able to write clear answer, how will the examiner give you marks? So sometimes we get this statement that I did well, sir, but I failed. Or I studied hard, sir, still I'm failing. Now, that statement needs to be reviewed. You studied, but are you aware of how to write the answer? So what is the solution, my dear friend? Of course, you can demand, sir, I want mock question paper so that I can answer. Why wait for somebody to create a mock paper? Yeah. Mock papers are ready. Take any of the past suggested answer. Yeah. Take any of the past question papers. Ideally, take 3 sessions ago. So if you're going to write the May, then I don't know, the new sequence would be January, November, or whatever, January, May, whatever. You select something in that 4 sessions ago, you select. Or ideally, your own session, say 3 sessions ago, May 25, you take. May 24, you take. That's it. Sit quietly. Give yourself 3 hours. Right? That is a similar paper is going to come to you in the exam hall. So if you're good at answering this paper, compare your answers with the guideline answer given by the institute. You yourself will know where you are. Then you have to start moving towards the best. I know this type of talk is irritating you beyond a limit. I know you're getting angry with me for stating it outright. But that is the way to pass the exam. Not by reading everything, asking complicated questions to the faculty. Then the faculty will learn more and more. I hope you understand what I'm saying. You asked me, one student asked a very beautiful query, which I will share with you when you come to auditing. But such queries, when raised to me, I'm so happy because I learned the subject by doing research. I wish you will also do it. Okay. Raise a question, you yourself answer it, check the answer. Then, if you want, send the query with the answer to the institute and ask, is my answer correct? I would appreciate that student rather than a student who can only ask questions. So much so that some of my earlier sessions I used to say, if only the institute exam has not, ask 5 relevant questions on accounts of company. Sure, all students will be able to raise questions. But what unfortunately the institute wants is answer. Okay. So here we have a similar type. Aditya Ram, Director of Suntech Infosystems, office in Seattle, USA, demands certain financial information relating to the Seattle. See, this is not a comprehensive class on accounts. So do not expect that. I am trying to combine content with exam orientation. So I'm orienting you towards the exam point of view. At the same time, using this content, okay, which is accounts and audit. Please get into the groove of what's happening here. Don't fight it. Come with me. Okay. Don't fight it. Don't argue and say what you're doing is wrong. Teach the subject like that. Okay. Don't do that. Teaching the subject, I can do it, yeah. But this is in preparing you emotionally for the exam, which is more important. Okay. Okay. Now examine the validity. Beautiful. Somebody has already given an answer. All of you can try. Aditya Ram demands certain financial information relating to the Seattle operations over phone. Seattle, if I'm not much mistaken, is a city in the US. I'm correct. It's given there. Seattle is in USA. I do not know which state. Maybe some of you may be familiar with US. You may know which state of US Seattle. I don't know. Okay. Examine the validity. Let us see if any answers have come. I saw one answer there. Mr. Nagaraja, Mr. Aditya, validity of this request. What do you mean by that? Are you saying it's valid? Are you saying it's invalid? Lokesh says invalid. And I thank him for that because it is invalid. Kyun? Because you remember, if it is a foreign branch, foreign office, and you want the information, it should be in writing. When a director seeks financial information kept outside India, he shall make a specific written request. In the instant case, Mr. Aditya Ram has asked it over phone. In case the written request is sent by Aditya Ram's advocate, should know. Why? Because the request should be made by the director himself and not by or through his power of attorney. Again, I'm telling you, you want to earn 2 marks, write this, that's all. And therefore, the request made by Aditya Ram is invalid. Since the written request was made by his advocate and not directly by Mr. Aditya Ram, that is also invalid. Okay. Okay. Reserve it for not less than 8 financial years immediately preceding. So 8 years is something you'll have to remember. Books of accounts should be preserved for not less than 8. Not less than 8. So you can have more, but not less. Ideally, 10. My humble request is, because sometimes in Income Tax Act, we need 10. Even there, 6 years, reopening 6 years. But as a caution, because sometimes when you see, let us say 8, we need some opening balance references for continuing transactions. So 2 years keep. Then, so that's what I say. But statutorily, under the Companies Act, 8 financial years. So we are now in 25, 26. So I have to maintain for 8 financial years. So 23, 25, 24, 23, 22, 21, 20, 19, 18. So up to 31/3/2018 financial books of account should be kept for the 31/3/2018. Okay. Before that, no need. Though I will insist that keep it 16. So that when 26, 20, 25, 26 gets over now, 25, 26 gets over now, you will get 25, 26 now. Then you can remove 15, 16. What we normally do is we burn the accounts, the books of account. See, you should always retain the signed financial statements, audited financial statements forever and ever. Don't destroy that. Ideally, if you want to scan it and keep it as a soft copy, no problem. Okay. Annual return. All documents uploaded with the ROC, you have to keep. That is permanent. But the books of account can be deleted if it is an electronic form, or it can be burnt if it is in manual form. Vouchers and papers in manual can be burnt, destroyed. Okay. But it should be maintained for not less than 8 financial years. Right. So this is 128. 128. We saw the persons responsible under section 128. Don't forget that. Yes. Now, this is the broad definition of financial statement. The word financial statement encompasses a bundle of documents. A bundle of documents, like one second here. Today, I just need to check one thing. Just need to check one thing. Okay, now I got it. I don't see any of you coming onto the query path. I don't know why. You can also do that. You can also come to the query path through where you can also raise questions in case. If you don't want to, don't do it. If you're coming from your mobile phone, don't waste it. Don't bother. You can directly come and ask in the chat box. But in case you want, you can. Okay. So wonderful. Now, financial statement. Quickly, we know that now. You know it. You don't have to see balance sheet, P&L, income and expenditure, cash flow statement, statement of changes in equity, etc. You might want to remember that certain categories of companies need not attach or need not annex cash flow statement, CFS. So, what are they? One-person company, OPC, small company, dormant company which is sleeping. It has been legally put to sleep, or rather, it has been made dormant. Like, there is one novel called Count Dracula by Bram Stoker. I'm sure you know Dracula by Bram. It's a vampire. So I'm sure most of vampires are, the daytime, they'll be sleeping in the grave coffin. In the evenings, when the sun sets, they'll come out. So dormant. And then when in the evening, they'll become life. So like the vampire, this fellow is dormant. Okay. He'll be given life again. But when we want, we can give him life and bring him back again. So dormant company. For such a company, need not have cash flow. But obviously, where is the cash flow? Yeah, the fellow is not, there is no activity. Then only he'll be dormant. For 2 continuous financial years, there should be no movement in the balance sheet, no P&L, no financial transaction. Only then he is eligible to become a dormant company. So why cash flow? What cash flow? Nothing, zero. Is cash from operations, zero. Cash from investing activity, zero. Cash from financial activity, zero. Total, zero. Opening balance, X. Closing balance, same. That's all cash flow statement. Over. So they say no need for all this. Private startup company. Okay. As defined under the Act. A startup company, which is a private company, need not have cash flow because they won't have any cash flow. That is the problem. Private startup company will be always struggling. They won't have any money going from investor to investor, begging losing, begging, getting, losing, begging, getting, losing. Losing, they will lose the money. Continuously, they will be making losses. Cash flow will be negative. So either the promoter will fund or some investor will fund. Finally, the company will be closed. I mean, out of 10 startups, hardly one will succeed. So I think the number will be more like out of 100, maybe 5 will really become successful. Out of 100. So 5 will be successful. That's about it. It's about it. So which is almost 1 in 20 companies. 1 in 20 companies will be successful. That too very difficult, but depends on many environmental factors. They may get a chance to become a unicorn. Which is the valuation game. Many of them don't have financial strength. The financials will not support the valuation, but only conjectures and imagination. And similar company has got valuation. Therefore, this company will also get that. Should be given that valuation like that. Okay, financial statements, that's all not very relevant. True and fair view should be confirmed by the, also it should be in the format given in Schedule 3. Schedule 3 is a very elaborate format, having its own internal rules, having its own internal compliance requirements. So each line item, there is a rule or there is a statement as to how it should be presented, what should be disclosed, what can be combined, and so on and so forth. Okay. Financial statements of every financial year shall be laid before the company at every AGM, okay, by the board. See, sometimes in my own office or when I conduct advanced MCS orientation and all, especially orientation, I keep telling the PA students, see, once you join articleship, no, whichever firm, could be a multinational firm, could be a mid-sized firm, could be a medium, large firm, or it could be a mid-sized firm or even a small firm, you will get a glorious opportunity to learn, provided you keep your eyes open. See, the job you'll be doing for a company as an auditor would be auditing the financial statements, which means you are going to be very much a witness to the process of preparation of the financial statements. So play an active role. While you are auditing, learn how it's done. See, there'll be senior chartered accountants in the companies which you audit who will be having experience. Even though you are an auditor, your boss, your firm is supposed to audit. So try to learn, nothing wrong. Don't define auditing as a fault-finding mission, where your role at that point is to find fault. Yes, if you identify discrepancies, they'll be more than happy to be informed, because the idea of the company is not to make mistakes, but to avoid mistakes. And if you are going to help them to do it, they'll be happy. But don't make that a mission of audit or your work as an article clerk, to put people down to show that they are wrong. Rather, you are young. Imagine the CFO of that company which you are auditing is having 3 decades of experience. He'll be 55 years old as against your 19 or 20. Think about it. You learn from him is the correct way. Maybe show your intelligence to him, impress him. If you find out, sir, I looked at this, is this correct, sir? Like that. Then he will teach you about that item. Yeah, you're right. Incidentally, like this, he will give you 3. That is how we learned. One whole generation, okay, who are born in 60s and who are now retiring, we learned that way from our teachers. Okay, we weren't arrogant. We didn't go and do things like that. So we were willing to learn. And that way our knowledge became strong, because it wasn't just theoretical. It was practical. So I can say that about even right up to people who were born in the 80s, I can guarantee that. So only post that things seem to have, post-liberalization, something seems to have happened to the learning mindset. Okay, I don't know. And which I'm again repeating, for these 2 topics, accounts and audit, your articleship will be the major learning ground. I keep saying that in my own firm. Because when you're getting a financial statement of a listed company, you are not just auditing it, you are learning. Go on. In the exam, this is what they're going to ask you in the auditing paper. Okay. What you're doing in our firm is what they're going to ask you in auditing. You write that. Whatever you did here, right there. That's it. Okay. So you saw debtors. You know what you saw. You know the audit working paper. You know what we have asked you to see. This is exactly the audit program. So you to verify data. That is all you have to verify. Simple. Sorry to make these unnecessary comments, but think like that. The way in which you approach this knowledge would become extraordinarily different. And you will become an extraordinarily brilliant and a different member of our institute, not the run-of-the-mill people. Okay. That is, if that is your goal, this is the way. So schedule 3 formats, try to go through practical formats. If you don't have access, because the firm is small, you don't have access to listed company balance sheets, don't despair. Moneycontrol.com or go to the website of one or two good companies, Ashok Leyland, Tata Motors, simple balance sheet, simple businesses. Download the balance sheet. Just scan through it. Whenever you are bored and you want to go to the go to Instagram or go to some whatever the thing is now the current craze, do that. Rather take this financial statement. That will be your leisure activity. When you are feeling bored with studies, go through balance sheet. Take notes. Immerse yourself in these topics. Immerse yourself in the subjects. You will automatically become an expert and you will write the paper with expert level knowledge. Okay. This is not just a faculty talking. This is a student talking who wrote the exam before you. This is also a member talking. Okay. Who knows what is the expectation of the corporate world as well as the profession from you. Okay. So consolidated financial statement, you know what that is. When there is a holding company, it has subsidiaries, associate companies, associate enterprises. All these subsidiaries and associate enterprises the account should be merged into the main CFS. See, the subsidiary is a separate legal entity. For all legal purposes, it is a separate legal entity. But only for the purpose of group accounts, for consolidation purpose, we ignore the separate legal entity. We merge the balance sheets. These merged balance sheets are called consolidated financial statements. I'm sure you are experts in the relevant accounting standard 21 and also the principles of how to merge or how to consolidate accounts, etc. etc. Here we are only going to see the legal principles. Okay. One important point is there. There is an exemption available. There is an exemption available for certain companies. Certain companies need not have consolidated financial statements. They need not consolidate. Got it? When 3 conditions are to be satisfied. 3 conditions are to be satisfied. The members, including those not otherwise entitled to vote, even differential voting right shares, different shares, who are not entitled to vote on this. Differential voting right shares with no voting rights, but dividend at a higher percentage. Whatever. All members, no member should object to the company not presenting consolidated financial statements. See, you go to the bottom line of it. Why have they got a rule about CFS, consolidated financial statement? It is simple. I give a classic example. I own Tata Consultancy Services, TCS. I own. Generally, I am a shareholder. Now, which means, boss, I'm not holding TCS, ma. TCS will be having shares in other group companies. You check out any Tata company balance sheet, you will find they would again hold in other companies. So they'll be having 7 or 8 subsidiaries. Now, if I want to know what is the value of my share in Tata Consultancy, initially I will look at the business of Tata Consultancy, project it, arrive at the intrinsic value and keep it. But that is not the only thing. In his balance sheet, he is having investments in group companies. Now, I will be following, if I follow our Prasad Damodar method, I will do an intrinsic valuation of each of those subsidiaries, arrive at the valuation of the share and take it here. Another easy method is the market is giving you a valuation. Take that as right and adopt it. Whatever it is, my valuation of TCS has to bring into it the valuation of these subsidiaries also. So that is the logic. So what the law is saying is, look here, don't make him do all that. You prepare a consolidated statement here. Show you in Vishwarupam with all the subsidiaries inside, Bhagavan as Vishwarupa. If you've seen the picture, you know all the whole, all the 7 worlds go into him. Every created being, both, inanimate, animate, humans, everything goes into him, and he is that. Now like that, this company should consolidate and bring all the subsidiaries associated, and whatever is the outsider liability, that will be shown as minority interest, because those guys are not. They may not see. After merging also, they'll say, you merge, you do whatever you want. Yeah, my value you give me. So you don't know what is his liability in my books as per the balance sheet. And if at all the company is wound up, this is what I have to pay. Take it. So that concept. So the logic is, as the shareholder of TCS, you should know the total picture. Right? Got it? But certain companies are given an exemption. Members, including those not otherwise entitled to vote, do not object. So their right is being violated here. So they should not object to this. Also, it is a company whose securities are not listed or are not in the process of being listed or in the process of listing on any stock exchange, whether in or outside India. See, did you notice how I changed my words? See, if I am writing this sentence, I will write are not in the process of being listed. But the law is using the word process of listing. So I used it. Nothing wrong. Okay, on any stock exchange, whether in or outside India. So it should not be a listed company. It should not be in the process of being listed also. Its ultimate or any intermediate holding company files consolidated financial statements with the registrar, which are in compliance with the applicable accounting standards. To understand that only, you have to see this diagram. C is the ultimate subsidiary. B is an intermediary subsidiary. Now are you able to understand intermediary? Ultimate A. A is the ultimate holding company. B is the intermediate holding company. C is the ultimate subsidiary. Are you able to understand? B is in the middle. Now they say, if you don't want to consolidate C, then 3 conditions should be satisfied. Friends, listen to me carefully. You will understand in the first explanation itself. You won't need a second explanation, provided you now listen to me. Okay. So now I don't want to prepare consolidated financial statement for C. If I want to claim this exemption, what I should do? First, I should ensure that none of my members is objecting, including those who are not otherwise. I should possibly send a mail to them or take their written confirmation that they have no objection. I can definitely say, in case you do not have any objection, if we don't hear from you within 15 days, we shall presume that you have no objection. You can put such a clause. Inaction can be prescribed. In this case, it's not a contract. It's only, if you has an objection, boss, I'm giving you 15 days, come on, object. In case you have not spoken anything for 15 days, my assumption is that you have no objection. Okay. It is a company whose securities are not listed. So you should ensure that C is not a listed company. C should not be in the process of listing. Okay. Lastly, either A or B, its ultimate, that is A, or any intermediate, that is B, should consolidate their financial statement. So B should consolidate with C, or at least A should consolidate B and C into it. Something, either intermediate or ultimate, should consolidate. Then you need not consolidate C. Got it? Or you need not consolidate B. Suppose I'm taking B, then B has a subsidiary C. I don't have to consolidate B with C, provided A is consolidating C into B and B into itself. Chain holding. So A is showing consolidated. B is not a listed company. None of the members are objecting. Then B and C consolidation need not happen. This is the exemption. Okay. They may ask you a question relating to this exemption. I think there is a question asked. Let us see. Yeah. Modern Private Limited is a partially owned subsidiary of Puri Limited, holding 90% of its shares. the company does not have any listed securities and is not in the process of listing on any stock exchange. Puri Limited, the holding company, prepares and files consolidated financial statements with the registrar. Considering the above, analyze and examine. Is Madden Private Limited required to prepare its own consolidated financial statement? Assuming that Madden has some subsidiary, assuming no information is given, we only know that Madden is a partially owned subsidiary of Puri. We don't know who comes below Madden, but assuming Madden, obviously, otherwise why should he consolidate? So assuming Madden, so Madden is like our friend P. So Madden is here, Puri is here. There must be some C. Otherwise, why should Madden even want to consolidate? There's no need. So in case Madden has a subsidiary, Madden Private Limited, is it required to prepare its own? What are the requisite conditions for the same? Should just ensure that you should state the three conditions. And then you should say that it is assumed that none of the shareholders, including those not having a right to vote, have any objection to Madden is given that Madden is not having any listed securities and is not in the process of listing. Also, the ultimate holding company, Puri, is consolidating. Therefore, Madden Private Limited is not required to prepare its own consolidated financial statements. In case it's going to have listed securities, then sorry, it is not eligible for the exemption. That's all. Okay. So this is one application of the law. Periodical financial results are to be filed. Once question was asked, that's why I'm giving this. Okay. So you just write this now, that's all. Okay. That's all answer to these two questions. Citing relevant provisions. The company's obligation. So this is it. Okay. That's all. You write this slide. So this is another continuously tested area. You are now listening to me now, your preparation over. If you remember it, it is enough. Boss, financial statement, including CFS, should be approved by the board and it should be signed by chairperson. So where there is a chairperson, that gentleman only will sign. But where there is no chairperson, then two directors. In case there is an MD, then MD should sign. Two directors, out of which one shall be MD. CEO, if he is there, should sign. CFO should sign. Company secretary should sign. Company secretary is a KMP. All of them are KMPs. All are KMPs. Okay. So now, if there is a chairperson, if that chairperson is authorized by the board, it's enough if chairperson signs along with CEO, CFO, company secretary. No chairperson, then two directors. If MD is there, one of those two should be MD. No MD also, then two directors. So, okay. Most companies, small, medium and all, will have only two directors. No MD also. Two directors will sign. Once the two directors have signed, auditor will sign. Yeah, let us see if you can give me an answer for this. To make it a little more interactive. Of course, I can give you the answer. Okay. See, in most of the cases, they will say, there is an MD and also that there is a company secretary. Then they will inform you that two directors, both of whom are not MD, will sign, and the company secretary will coolly not sign. So whether that is valid, they will ask. It is not valid. See, we have W, X, Y, and Z. Also Mr. D. Now what happens? X and Y are signing, whereas D is MD, he is not signing. So X and Y cannot sign. Either X or Y along with, W, X, Y, or Z along with D. D plus W, X, Y, or Z. And definitely Mr. Weiss should sign. it is also surprising that Mr. Weiss, being a company secretary, has not advised this company correctly, where you need a chartered accountant, auditor to come and tell them. Why can't the company secretary inform them, sir? They have to sign, sir. Also, the MD has to sign, like that. What do you say? Instead, he has permitted that to be signed by two non-MD director, X and Y, which is wrong, invalid. But if it is an OPC and has only one director, no problem. OPC may have only one director. In case of OPC, it is sufficient if only one director signs. No problem. Similar question. Okay. See, Ghanshyam, Haider, and Indersen. The company also has a full-time company secretary. Doing what he is doing, God only knows. Okay, he is not advising at least correctly. Ghanshyam and Haider are signing. Either Ghanshyam or Haider and Indersen should sign, and company secretary should sign. That's all. See, this is a standard template, oft repeated. Now you might say, sir, if they don't repeat next time, what to do? Forget it. But nothing wrong in remembering this now. And if it comes in the exam, hallelujah, write it, yeah. That is called luck. Are you able to understand? Some people will tell luck. That man Srikanth having luck, yeah. That is why he's getting rank. Maybe so. Maybe so. I had luck. But the luck was like this. These type of questions I will impulsively prepare and go. My luck that would come in the exam, I will bash it. Okay? I mean, sorry. See, I'm not 60 years old, but my blood is still hot. Yeah, what can I do? Yeah, I'm not becoming old. I'm still getting energy and still getting shouting and, becoming emotional. I was like this at 25. I'm still like that. Okay. Why 25? At 18, when I was preparing for my CA exams. When I was 20, when I cleared my CA intermediate with All India 27th rank. At 21, when I cleared my CA final with All India 38th rank. My blood was hot. I was hot. Till date. Okay. I'm not able to become like that. Sorry, that's my unfortunate problem. Please don't mistake me for that. Okay. Now, this is what our Nagaraja sir was asking. That is, not less than 21 days before the meeting. Okay. See, your AGM notice is issued 21 clear days before the meeting. Same. Along with the report only, it's going now. Along with the notice only, your report is going now. Your financial statement are going now. So that also should be 21 days before. But just like, you have a provision when you studied management and administration, you might have studied. Can I give shorter notice for AGM? Yes, you can. For EGM, yes, you can. What is the procedure? You know that. Similarly, here also, if you want to send it less than 21 days before the date, then it can be anything, even 5 days, 7 days. Provided shorter notice is agreed to by the number of members. In case of a company having share capital, majority number entitled to vote, only majority number entitled to vote, representing not less than 95% in value of paid up capital. 95% in value of paid up capital. Try to remember this. See, if you just listen to me, have your notebook, write it, internalize. You don't have to read again. This is revision. Majority in number, that means 100 shareholders, 51 number. That 51 should be holding not less than 95% in value of paid up capital. So dual condition, majority in number representing not less than 95%. Two, simultaneously, not having share capital, not less than 95% of total voting power. See, in case of a company having share capital, on a poll, one share, one vote. On a poll, normally voting by show of hands, but once a poll is demanded, on a poll, one share, one vote. Right? In the case of company not having share capital, one member, one vote. So total voting power of a company not having share capital is the total number of members. Suppose the company is having 10 members, then total voting power is 10. So members having not less than 95% of the total voting power. Go figure, 9.5. Half a percent and all you cannot get. All of them should agree. Okay, that is how it is. Okay. 9.5, how can I get here? 10. So 10. Can't be 9. Not less than 9.5, 95%. Ladies and gentlemen, will please note, not less than 95. That means if you say, sir, 9.5, I will round it off to 9, then it will become less than 95%. See, I told you, there are 10 members. Total voting power is number of members. So how many members should agree? Not less than 95%. What is 95% of 10? You know that 9.5, right? 9.5. So how can I get, so sir, we round it to 9.5, I will round it this side. No, you can't, because it says not less than. Therefore, all of them should agree. All 10 should agree. See, this is the type of question that could be ideally asked in the examination, because they are not just testing your mug-up capability and your vomit capability, but your application capability. And that's how it should be tested. CA students should be tested on their ability to apply the knowledge, because the real world continuously tests. Today, before I started this class at 6, I've had 4 dictations, 4 submissions to the department. Each one of them was studying the law of income tax and applying that law to a given set of complicated facts and coming out with an argument to the department, asking them to do what I want for my client. Now, this is the way, this is the expectation for a practitioner like me. But suppose you are going, no, sir, but still, this ability is important. This ability is a skill that has to be somehow developed by you, ideally in English. Ideally in English. Okay? Because maybe in the northern side, you can respond in Hindi, etc. Even there, I doubt if you make submissions in Hindi to the department and all. Maybe you may do in interior Madhya Pradesh, interior UP. But mainstream corporates, mainstream cities, mainstream metro cities where real employment happens, you will have to have some knowledge of fluency in English. Thank you, Mr. Nagaraja. Thank you. So here's the question. Navayug chemicals. Why don't you answer that question? With that, I will be moving to corporate social responsibility, which is important from exam point of view. Then auditors. Input in NFRA and all, you read once. Session. Reopening and all is fairly simple. I'm not going there. Reopening and all that. So quickly, Navayug Chemicals Limited, an unlisted public company, has 200 members. Its paid up share capital is 50 lakhs. 5 lakh shares of rupees 10 each. See, on a poll, 1 share, 1 vote. So the total voting power is 5 lakhs. The company is proposing to hold its AGM on 28/9. There was a delay in submission of accounts audit, blah, blah, blah. Typical. And hence, signed financial statements ready only on 10/9/2021. So they have to hold their AGM on 30th. So when is the time? Even if they post it 48 hours. So they need to. So the company has obtained the consent of 160 members who are holding 45 lakhs of paid up capital. Can they proceed? 160 members. Company has 200. 50% is 200. 200, 100. So that is clear. 160 is well above 51%, right? But they should also represent majority in number entailed to vote, representing not less than 95% in value. So on 50, 95% in value. Let us see if any answer is coming. Yeah. So you have to calculate 50. 50 lakhs into 95. 47 lakh 50,000. Whereas here they got only 45 lakhs piece. Therefore, the provision is not satisfied. Okay. See, even if the AGM is not held, you have to file the accounts unaudited with the registrar. Even if it is unadopted in the AGM, you have to file. If it is adopted later on, then you have to file the adopted. Unadopted should be filed as provisional within 30 days. If you are not holding AGM, then within 30 days of the date on which you ought to hold AGM, you have to file. Now, what I'm going to do, my dear friends, is go to CSR. See, director's responsibility statement is also important. It is pure theory. Please read it and remember it. CSR, what I'm going to touch on is three important parts. One is the conditions for constituting CSR committee. You should know it. Frequently, questions are coming in that area. So, net worth of rupees 500 crore or more, turnover 1000 crore or more, net profit 5 crore. These numbers should be as on these numbers should be seen as on the last day of the immediately preceding financial year. The audited balance sheet as of the last date of the immediately preceding financial year. On that day, if you have got 500 crore net worth or your turnover is 1000 or more, 1000 or more, 500 or more, 5 or more, so even exactly 5 covered. Okay, then you have to constitute a CSR committee. Right, sir? Now, one of the negatives, that is CSR, they're given a definition. Also, they're saying certain things are not CSR. For example, anything that has a business case, if it will, you are incurring it for improving your business, even though it might benefit the public, it is not CSR. Also, anything that is done as part of your business statutory duty, like Factories Act, is not a CSR. Also, anything that is done abroad is not a CSR. So, any foreign work, for suppose you go to Sri Lanka and provide relief to the people who are suffering in Kilinochi, no problem. It's a good work. Rotary does it, and we are proud about it. But if CSR money cannot be used for doing something abroad, sorry, that's how the law is. Don't ask me why. That's why they say, while computing net profit, suppose you have an overseas branch, remove the profit from the overseas branch. Yeah, for calculating compulsory CSR amount, remove that. No problem. Also, dividend received from companies, other than other companies, who are complying with 135. That is, those companies are already constituted CSR committee and contributing. Remove that. So what you get is that net profit on that, you have to pay. You have to, every year, okay, you have to deduct 2% of the average net profits. 2% of the average net profits of 3 immediately preceding financial years. Why I stress this? See, there are so many slides I'm skipping because they are all basic theory. This is what is going to be tested. So they'll give you profits and ask you to compute the amount to be contributed. Every company which is required to form a CSR committee should ensure that in every financial year, it contributes at least 2% of the average net profits of 3 immediately preceding financial years. See, if you look at it here, this question is pertaining to 22-23 financial year, 23-24 financial year. That is why they are given 22-23, 21-22, 20-24. Now, 3 immediately preceding means 22-23, 21-22, 20-21. You have to take the average. Got it? 30 plus 70 plus 50, 150 divided by 3. I get 50. On that 50 crore, I have to calculate 2%. It comes to 1 crore. Therefore, this company has to spend 1 crore towards the CSR. Okay. Similarly, in case the company does not spend the CSR, then it has to transfer it to a separate unspent account. Okay. Okay. So, also, if any surplus is arising, suppose they are doing some, promotional activities for handicrafts, whatever, or they are running a goshala. Now that goshala, the cows in that goshala are producing milk, and that milk is sold, and that is actually getting into the surplus. which is more than the amount of maintenance of the cow, they are getting some surplus. Then that surplus should be redeployed into that activity. It cannot be a part of the business profit of the company. That amount also should be plowed back. Are you able to? In case you don't do that in that year, it will be transferred. But what you can do is you can get into an ongoing project, which will take more than 1 year, and you can accumulate. But that money should be spent within 3 years on that ongoing project. Okay? Minimum within 3 years you have to spend it. In case you have made any excess expenditure on CSR, suppose in 1 year, see in this case, this company is supposed to spend 1 crore. Instead, they have spent 1.5 crore. No problem. That extra 1.5, that 50 lakhs, that can be carried forward and set off for future requirement. Suppose next year you have to spend 2 crore. Then out of that 2 crore, this excess 50 can be set off. It is enough if you spend only 1 crore 50. Got the point? But it does not include surplus. Surplus should be spent immediately. Okay. So this is how CSR should be understood. In case there is any amount remaining unspent, then within 30 days from the end of the financial year, it should be transferred. Okay. If it is for an ongoing project, it should be transferred. It will be kept there. Okay. For 3 financial years. Okay. Any amount remaining unspent pursuant to any ongoing project. See, if you don't have an ongoing project, if you don't spend it in that year, immediately you transfer it. After the end of the year, within 30 days, you transfer it to the fund. There will be a fund, Prime Minister's Relief Fund or whatever. Transfer it. In case you are decided, no, this money we are not going to spend this year, sir. But we are going to, that Goshala, we are going to build a new cow shed for the animals. We are in the process of designing one cow shed. It will take me 3 years. No problem. So you transfer it to a separate account. Don't touch it. You are not going to use it in your business. No. Push it. Keep it there. Within the next 3 financial years, you build your scientific cow shed. Whatever. Within 3 financial years, don't spend it. Then, in case the amount is not so utilized, the company shall transfer the same to a fund under Schedule 7. See, best thing is give it to the Prime Minister Care Fund. Our enlightened Prime Minister knows how to spend your money. You don't bother. You give it to him. He will spend it for you. Okay? Transfer it and you are safe. Because that is one of the CSR, accepted CSR. Giving to Prime Minister's Relief Fund. Okay, friends. So this is how it is. Internal audit is compulsory. You should remember these limits. For a listed company, whatever may be the capital turnover, listed company means straight away internal audit is there. If a company is listed, compulsorily internal audit. Unlisted public company, made up share capital, 50 crores or more. Or turnover of 200 crores or more. Or loans borrowing from banks or PFI, 100 crores or more. Or outstanding deposit, 25 crores or more. So for all that, you have to see the immediately preceding financial year. During PFY, previous financial year. On the last day, you have to see. Private company also has to have compulsory internal audit, provided turnover 200 crores or more, or outstanding loans borrowings exceeding 100 crores. Okay. So this is this slide, if you remember it, it will be very easy to answer these questions. If you know this, you can answer this blindfolded. If you don't know this slide, if you don't know, then you'll be guessing. So remember this. Take a piece of paper, read this fully, try to remember, take a kagas thing, write. From memory you write. Then compare. Made the mistake, take red ink pen. Correct the mistake in red ink. You will never forget it again. This is the secret of remembering for me. When I make a mistake, I write it again in red ink. Therefore, I never forget the. When you write in red, you are supposed to remember it better. Okay. So this is what it is. So this is accounts of companies. I shall presume that you have no questions to ask. Beautiful. Wonderful. Now we will be moving on to the next topic, which is auditors, audit and auditors. Now, before we go there, the time now is about, if I'm not much mistaken, 7:30. Whatever. Let's have a 5-minute break. 5 minutes. Okay. And then again, we'll go for break. Sir, 5 minutes break, sir. Sir, 5 minutes break. Sir, shall I start again? Hello? Shall I start?
जी सर जी।
Shall I start? Hello? Okay.
1 minute sir.
Yeah. I wanted a break. I went for a 5-minute break. So can I start?
Sir, please continue.
Thank you. Friends, welcome back from your well-deserved break. Let us jump into audit. And audit is again a very interesting topic, very close to the heart, especially for practitioners like me, because this is where we earn our bread and butter, conducting audits of companies under the Companies Act. Out of these topics, I obviously, the whole, it is normally covered over 6 hours. Topics covered over 6 hours. Okay, no, sorry, 6 hours. So here, I'm going to concentrate on certain important areas, especially this, where disqualifications frequently tested. Okay. Also appointment. We'll concentrate. Right? And removal. These 3 areas frequently tested. Rested is important, but not regularly asked. Chalo. Now, I don't have to waste your time on this. Rather, let's get into disqualifications. Yeah, very important. We'll see the disqualification. Body corporate other than limited liability partnership registered under LLP Act. So body corporate cannot be an auditor, but LLP can be, though it is a body corporate. Exception. An officer or employee of the company cannot be. A person who is partner or is in employment with an officer or employee, no. That is, Mr. A is a officer, okay, meaning director or whatever, officer. Officer definition you see, okay. He is a chartered accountant, but he cannot be an audit, and he is holding a COP. No, part-time COP. He cannot be the auditor. Also, suppose he is a partner of a firm, right? He is holding part-time COP and he is a partner of a firm. The other partner of the firm, no. Suppose he is having an employee in that firm, no. You will understand. Though he may be that employee may be holding COP, still he cannot sign. Obviously, because there would be lack of independence, right? When you're very difficult, sir. Very important, 141.3D. Can you remember this? Write it somewhere. 141.3D. Then there you have 1, 2, 3. This is 1, 2, this is 3. If you see, just try to remember it. Now in the exam, if you write it, the examiner is going to be very much impressed. So 141.3D, 1, 2, 3. Right? Three important disqualifications. A person who or his relative or partner is so such a person or his relative or partner. So that person or his relative or partner is holding any security of the company or interest in the company. Okay, mainly security. So if he is holding any security, why they say interest in, you will ask, where the company does not have any share capital, Baba, it will be interest only. It won't be share. There won't be any share capital. Therefore, interest. Okay. So if, instead of breaking your head over this, concentrate on the hardcore topic. What is that? The auditor should not hold any security of the company. Relative or partner also should not hold any security of the company or its subsidiary, nor of its holding or associate or a subsidiary of such holding company. So I can easily diagrammatize this. This is the company. This is the subsidiary company. This is its holding company. Am I correct? This is associated company where I'm holding substantial interest of not less than 20%. Then this holdings company may have a subsidiary, na? Same level subsidiary, my co-subsidiary. That also. So auditor should not hold shares in the company, correct? Its subsidiary, its holding company, or any associated enterprise, associated company, or a subsidiary of its holding company. A subsidiary of its holding company. Easy to remember. This, if you're thinking, how can I remember this, sir? I'm finding it very difficult, sir. No problem, sir. This diagram you remember, sir. In your mind, you just keep the diagram. Company, its holding company, its subsidiary company, associated company, subsidiary of its holding. That's all. So, and you're not going to write this, sir, anywhere. Nowhere they are going to ask you to write. But I don't know, you may have to write this because no, you don't have to write this. You have to remember this. In the exam, if they ask you, A Limited, the audit, Mr. X is the auditor of A Limited. He is holding shares of face value of 1,50,000 in the subsidiary of A Limited called AB Limited. Can he be appointed as auditor of A Limited? No. So you should know, it is 1 lakh should be held, face value should be held not only in company, subsidiary also, holding, associated company, subsidiary of its holding company, co-subsidiary. It's all. Okay. I mean, if you think like that, it's not difficult to remember. If you get involved in what you're studying, if you get connected to what you're studying, memory will come. But if you're disinterested, if your mind is wandering to other things, then it won't focus on studies. So next 2 months, 3 months, if you're 26 May, whenever you go for leave, you're going to demand from your boss, now, leave. Use that leave effectively. Become a sannyasi, literally become brahmachari. See, brahmachari means he should totally disengage himself from the worldly pleasures. Nothing. 3 months, nothing. There is no brahmachari. When the ancient learners of our ancient knowledge, when they went to the Gurukul, that's what they were doing. Food, no bland food. No, nothing, no party, no pub, nothing. Okay, no cricket, no distraction, only the knowledge. If you are able to restrict yourself, discipline yourself that way, this course is easy. But if the discipline is not there, mind is wandering here and there, then focus on the subject is last one. Okay, 3 months, yeah. 3.5 months, let's say, of your life. The rest of your life will become totally enjoyable. That's what incentivized me to work hard. So I was thinking, Srikant, you do this, your entire life is going to be safe. You don't have to beg to anybody for a job. They will beg you to give job. Think like chartered accountant. Once that imagination comes now, your mind will focus on this rather than that stupid cricket game or a movie or first day, first show of some actor who is going to get rich while you don't clear the exam. Why, yeah. That fellow will again make another similar boring, stupid movie. Watch that. Once you become a CA, first day, first show, go in your Royal Skies car and watch it. But now concentrate on subject. Okay. Humble request from a 60-year-old man who has gone through it. Not a teacher, I'm not a professor from a college. I am a practicing CA coming here to teach you. Okay. Okay. Now, so this is 1 lakh. Remember face value, meaning nominal value of 10 rupees. So if the Infosys, the company called Infosys, their share value is 1,500 rupees or maybe 1,600. Right? Face value 1 rupee. Or maybe 5 rupees. Correct me if I'm wrong. But don't bother to correct me. You learn. If it's 5 rupees, 5 rupees, 1 rupee, 1 rupee. Point is, if I want to buy 1 share of Infosys, I have to pay 1,500. But face value only 1. Like that, 1 lakh shares, you multiply by 1,500. You will get the amount you have to invest to get 1 lakh face value. So nobody will be holding 1 lakh face value. Okay. But if so he is holding, then he cannot be a auditor. Okay. Of that company. Right? See, take simple example, boss. I am having 3,600 shares of Reliance Industries now. 3,660 shares. Fact. It's disclosed to the income tax authorities. Okay. Now, 3,660, 10 rupees per share. So 36,600. If Mr. Ambani wants me to be the auditor, my firm can be. Because my holding is not going to be more than 1 lakh in face value. If my firm is asking me for a declaration, I can give. I'm not holding more than 1 lakh in face value. Because 1 lakh in face value into 1,500 will go heavy. Whereas I'm holding 10 rupees if you multiply 36,600 rupees. Yeah. So shares. 36,600 rupees. It is well below the limit. So remember, in the exam, they might give you market value and face value. Don't get cheated. Only the face value you have to consider. Which if it is less than 1 lakh, eligible. If that person or relative or partner is indebted for an amount in excess of 5 lakhs. Please note, the exception of 1 lakh, there is to 1 lakh can be held is only for, sorry, I made a mistake. I'm sorry, I made a mistake. I'm so sorry. I cannot hold. If I'm holding shares in even 1 share in Reliance, I cannot be. But if my wife is holding, no problem. Up to 1 lakh. Up to 1 lakh, no problem. In fact, it so happened that in one company where I was the auditor, I will not name, there, the promoter was so well known to me and was so impressed that when he wanted to, go for crowdfunding, we helped him to raise funds through, what do you call it? Without going for public, we got it through crowdfunding through his own sources. Okay. Now, that at that point in time, he said, Shrikant, why don't you also invest? Luckily, at that time, the law was not amended. For your information, I'm talking about early 90s, when the law was not amended. When a chartered accountant could hold shares in the company, which he is auditing. I'm not joking. There was a time like that. Then they amended the law and they said CA should not hold any share, even 1 share. What to do? Luckily, they gave us 30 days grace time. So immediately I transferred all my shares in that company to my wife. They said relative can hold. So relative I transferred. 1 lakh was also not there. Any amount they can put. So it was very small. It wasn't very big. 1,50,000 or so, she had it. Then she finally sold it for a substantial amount. And the company went, it got first level funding, second level funding, she came out. She became very rich. Okay. But hello, relative can hold. Then only this 1 lakh limit there in the new law. Okay. For information. So much of what's there in the new law was there in the old law also. It's not new. Okay. Now, as far as auditor and relative or partner is concerned, none can be indebted for an amount in excess of 5 lakhs. Indebted means the auditor should not owe anything in excess of 5 lakhs. You can't owe. That's why even advance, you have to be very careful. When you're taking an advance, of course, advance can come under exemption, but still you have to be careful while taking advances. Okay. Preferably when it's going to exceed, immediately convert it into a bill and settle it and adjust the bill. Balance, you keep it as advance. Lastly, instead of taking a direct loan, somebody takes a loan and the auditor or his relative or partner is giving guarantee or any security on behalf of any third person in excess of rupees 1 lakh. Okay. In all these 3 cases, there is a disqualification. In case any security interest is acquired by a relative, above the threshold limit, then the corrective action can be taken within 60 days. A grace period of 60 days is given to correct it, so that the auditor can request the relative to transfer the shares over. So, a prominent manufacturing company is in the process of appointing a new auditor for the upcoming financial years. A is a renowned auditor being considered for the role. During the due diligence process, the following details come to light. B and A are partners in ABC and Co. B has taken a personal loan of rupees 4 lakhs from XYZ Limited subsidiary EFG Limited 6 months ago. You're able to understand this question? XYZ Limited is going to appoint a new auditor. Mr. A is a renowned auditor. He is being considered. But during the DD, before appointment, the company will go through a due diligence. They will ask declaration. I told you, they will ask. So he is giving declaration. I am partner in ABC and Co. Okay, in which B and A. Now, so happens that B, the other partner of ABC and Co., has taken a personal loan of 4 lakhs from XYZ Limited subsidiary EFG. So can A be appointed? Similarly, A's relative, C. See, relative definition, you have to be thorough. You be thorough. It's a simple definition. Wife, members of undivided family. Then that section, the rule 4. You can just go through that. 4A rule. You can go through that. It's not very difficult. Father, mother, brother, sister, daughter, daughter's husband, son's wife. So, nothing else. Okay? Daughter's husband, son's. Father-in-law not there. Father-in-law is not a relative. Brother-in-law, wife's brother not a relative. Sister's husband not a relative. Both brother-in-law is not relative. What do you point? Both Baba is also not relative. Machan is also not relative. Both are not relative. Okay? Under the Companies Act. But here we are told that she is a relative. Must be a sister or daughter. Because if it is wife, it will be Mrs. Na. Mrs. A na. It can't be Miss C. Okay? So, Miss C has an outstanding debt of 2 lakhs. The DEF Limited. An associate company of XYZ. Which was taken 3 months ago. See, when it was taken doesn't matter. Yeah. So long as it is existing on the date, you are asking for the question whether he can be appointed as an auditor. So in both these cases, is he disqualified? Remember, indebtedness, the limit is 5 lakhs. Remember, 5 lakhs. Whereas for guarantee, it is 1 lakh, shares, it is 1 lakh. Okay? Only one person has answered. Again, Mr. Nagaraj, he is replying most eligible, correct. Because in both the cases, it is less than 5 lakhs. Therefore, A is most eligible, as the Nagarajan says. So relative definition is what I said. It's very easy to remember. You don't have to mug up. Just in your head, individual, above father and mother. Yeah. Without father, how I come. Then along with me, one brother, one sister. I don't have. I only 2 sisters, brother and sister. Then below, I have one son, one daughter. Daughter is married, so daughter's husband. Son is yet to be married. When he is married, son's wife. It's all. Think like that, you will get the complete set. It's not difficult to remember subject. If you look at it like that, easy to study. Not only law, any subject. If somebody says that this subject is boring, there are no boring subjects. Only disinterested students, uninterested student. Create interest. At least out of love for the subject. If not, out of love for your future money. If you clear this stupid subject now, maths was one of the dreaded subjects for me. I used to hate it. Okay. But still, in those days in CA intermediate, can you imagine? We had one full paper, mathematics and statistics, 100 marks. Mathematics, not foundation, intermediate. I'm not joking, 1980s. 87, I wrote in 87. 86. Okay, then it was removed later. How it was removed is a story by itself. which I cannot tell now. 1989, 89 or so, they removed it. So even that paper, I attended one coaching by one L.S. Kumar. Tried to develop an interest for the subject. Tried to understand bare minimum so that I could go there and get 55. For me, every subject I should get above 50. Not pass mark. Pass mark not enough. Okay. Okay, this is person or firm, whether directly or indirectly, has business relationship with the company. So you cannot be a customer or a vendor if you are an auditor. But business relationship, they say, is any transaction entered into for a commercial purpose, except where the auditor is providing professional services which is permitted to be rendered by him. For example, tax advisory, no problem. Tax audit, no problem. But where it is prohibited under 144, no. We'll see 144 a little later. A person who is relative, similarly, commercial transactions which are in the ordinary course of business at arm's length, like sale of products and services. Okay. In the ordinary course of business, on the same terms. What is arm's length? The auditor is not getting favorable terms. He's getting the same terms with a unconnected customer will get, he is getting. Then unrelated customer, whatever rate he will get, he is getting. Then no problem. Arm's length, no problem. Based on this, a query was raised, which I really loved. One student raised the query to the Board of Studies, and we had the good fortune to go through it. And the faculty team in Board of Studies and me, we went through it, and it was a very nice question. You see, where that student is giving a nice situation. There is an auditor. Auditor is entering into a commercial transaction, purchasing some goods, whatever. The value of the goods is 5,01,000. The value of the goods is 5,01,000. The company is giving him 1 month credit. He is allowed to take 1 month credit. Normally, every customer is given 1 month credit. The transaction is an arm's length transaction. It is arm's length. Got it? Therefore, there will be no 141(3)(e) issue, because so long as it is arm's length, standard terms which is applicable to all people, even giving credit is standard practice, then 141(3)(e) will not apply. But the value of the transaction is 5,01,000. Very important. The minute it goes above 5 lakhs, what happens? Our friend 141D will get affected. 141(3)(d)(2). The auditor will now become indebted for an amount in excess of 5 lakhs. Therefore, the auditor will be disqualified. Very beautiful question. There are two disqualifications. One is cleared, but because the credit is given for more than 5 lakhs, that auditor will become indebted for an amount in excess of 5 lakhs. Therefore, he will become disqualified. Under 141(3), this is where if you know the sections and you write it, no, you will be appreciated. If you say bluntly 141(3), both are 141(3) only. You should know 141(3)(d)(2), whereas this is 141(3)(e). Okay. F is a person whose relative is a director or is in the employment of the company as a director. So, person whose relative is a director. Only, they are talking only about director here. Or is in the employment of the company as a director or KMP. See how they distinguish between this and employment as a director is, this is PTD, part-time director. This is part-time director. This is full-time director. Employment of the company. Or a KMP, like a company secretary or a CFO. It's a KMP. So relative of director or employee director or KMP cannot be a auditor. Okay. Full-time employment elsewhere. Also, there is a limit of 20 companies. No, every auditor can have only up to 20 designated companies. Beyond that, no. If it's a firm, then every partner will have a limit of 20. So 3 partners, 60. That again, sublimit is each partner only 20. It's not as if I hire a partner, I get 20 audits. No. For him, 20. He can sign only 20. If I can't say, boss, you come, your 20 I will take, I will sign all. No. He has to sign those 20. Okay. But exemption is there, very important. OPC not included. dormant company not included, small company not included, private company having share capital less than 100 crore not included, above 100 crore included. So private company is not exempted. But if it's a private company having paid up share capital less than 100. Also, a person who has been convicted by a court of an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. Okay. A person who has directly or indirectly renders any service referred to in section 144. See, 144 gives a list of services that auditors should not deliver to the company where he is a statutory auditor. Now, in case he incurs any of these disqualifications, straight away he will vacate office. And that will be deemed to be a casual vacancy. Only exception where a relative acquires shares, he is given 60 days grace period. Other than that, any other disqualification, the minute he acquires it, he will vacate office. Shall be deemed to have vacated, and his vacation will be a casual vacancy, which means that it can be filled by the board. Okay. I don't see anybody else answering, not even Mr. Lokesh. I think you have lost interest. Huh? See, CA at the time of appointment, there was no relative. But on 15.4, in question number 1, and 15.4, the CA Vikas brother is appointed as a non-executive director. Non-executive director also covered. That's why they are using two words here. Director, there is non-executive director, and employment of the company as director, whole time there. Okay, both are covered. The consequences are he will vacate office. That's all. Ram, brother of Sham, a practicing CA, acquired securities of COL Limited, having market value of 1,20,000 rupees. Face value 95,000. So, since the face value is less than 1 lakh, even the market value may be 120, doesn't matter. Face value less than 1 lakh. Therefore, Sham is qualified, not disqualified. See, in my humble requirement, suggestion, when you're writing the answer, don't write Sham is qualified, as I wrongly said. No. Only a chartered accountant and member of the Institute of CA or a firm, majority members of our ICAI, is qualified. Otherwise, you have to say not disqualified. So CA Sham is not disqualified. Okay. Suppose it is exactly 1 lakh, no problem. He can hold. Exactly 1 lakh allowed. If it crosses 1 lakh, gone. 1,05,000, Sham is disqualified. Okay. Yes. During my regular classes, a lot of digging into people's mind, I used to get extremely well drafted answers. I'm not joking. I kept on bombarding the batch over 3 sessions, write full sentences, write in good English, write complete answer. And I used to give them time. And they used to produce decent answers. And 1-line answer, 1-word answer. No, this is not 1-word answer. Okay, you are right. So, point, my dear friend, I know, sir. But in the exam, when you see the paper, 3 hours, you're right. Writing practice is needed. Okay, luckily you are young, so you don't have a cervical problem like me. I am now doing my MA in Vainavam philosophy. So I have to write 3 hours exam. Yeah, every 6 months semester exam is there. I have to write 3 hours exam, written exam, everything theory, no math. No accounting and all in Vainavam. Everything is theory, philosophy. You have to write pages and pages. Okay? And why I'm sharing this with you is not to say that I'm doing this, not like that, but to say, I know how difficult. So I used to do practice. Even at the age of 59, I used to sit in my room, take the model questions and take one question. Then from my memory, I will write the answer. Then check the correct answer. Means I'll check what could have been written. There's no model and all here. Okay, and I'm not joking. If you want to do well in exams, this is the process. There is no easier process for you. Do it. Writing practice is needed. And remember, I have a cervical. So after about 5 to 10 minutes, my hand will become, I can't have feeling. So again, I have to do like this and all, and again start writing. Okay. Why I'm saying this, there is no gain without pain. But you might ask me, why are you doing MA? Why not? You are doing CA because you want to earn a lot of money. Okay. But I'm 60. Now for me, the need is no longer money. It is a different need. It is a different knowledge that I'm trying to acquire for a different goal. But whatever it is, if there is a goal, there is a knowledge to be acquired, then the only way to acquire that knowledge is by reading, remembering, and writing. Okay. There's no other way. Any other way is a dangerous way. Other institutes have tried the MCQ route and have hurriedly come back to writing on pen on paper back. I don't name who it is. They went for entire MCQ. The output was so bad. The product which came out of the MCQ route did not know even the basic fundamentals of the subject. But MCQ is easy for student. But at the end of the process, they didn't have depth of knowledge. And they could not present answers. So whereas as a CA, you have to make presentation. You have to write. If not write, you have to type in Word and submit it. Okay, whatever. You have to dictate to your secretary or to your article clerk. Okay, so you should know how to do it. Chala. This is a wonderful Prem Ka Kahani. I always love to see. Anil was appointed as auditor of DEF. While doing the audit, instead of doing the audit, this fellow was falling in love with one Neha. Maybe he was doing the audit also. And then he fell in love with Neha, the company secretary of the company. They fell in love with each other and got married on 15/1/2020. Okay. What will happen? Can anybody write a full sentence instead of words like disqualified, not eligible, okay, sir, like that? They want full answer, sentence, full grammatically drafted English sentence. Yes, thank you, Mr. Nagaraja. Since Neha is an officer of the company, Anil is disqualified under section. Beautiful. I love you for this, sir. This is exactly what you are expected to write. Disqualified the late date of marriage. Beautiful, sir. Beautiful, sir. Excellent. This is exactly okay. And so, yes. And instead of using the word officer, you can use the word KMP because Neha is also a key managerial person. Company secretary, they are very proud. They are key managerial personnel. But for all liability under the Companies Act, KMP only will be covered. Okay. So similar. These are the prohibited services. Friends, I'm not going to take you through it. It's already there in the material. You have read it many times. Remember it. Because in the exam, they will give one of these. It should be covered under this. Otherwise, he's eligible to do it. For example, tax audit, not covered. He can do. Tax advisory service, he can do. Consulting service, no. Managerial consulting, no. Management services, no. Design and implementation of financial information system, no. Internal audit, no. In fact, the statutory auditor cannot be the internal auditor. This question is a theory question. Surprisingly, it has survived. Under the Companies Act, an auditor appointed by the company is allowed to provide only those services that are approved by the board of directors of the audit committee. However, there are certain services that an auditor is expressly prohibited from entering, whether directly or indirectly. So the company or its holding company or its subsidiary list any 7 such restricted services. List. Friends, note it, your honors. It is list. List means don't elaborate. Just your right. You have to remember. Totally, how many are there? 9. Out of that, they are asking you to write 7. Any 7. Better remember all the 9. See, low-hanging fruits, yeah. You can easily remember internal audit, accounting service, accounting and bookkeeping service, actuarial service. If you want, you can remember design and implementation of any financial system, investment advisory. It will be tempting to do that to that company because you might say, I will also advise you. No, prohibited. Because there will be a loss of independence. See, this is what happened with a very famous firm of CAs and a very big US corporation. It's called Enron. That's called Enron scam. The firm was called Arthur Andersen. No more. Arthur Andersen got totally destroyed in the Enron scandal. What happened was Arthur Andersen had a consulting division and also an audit division. So the audit division was small, consulting was huge. But the engineers of the consulting division were paid salary by the partners of the audit firm. Can you imagine? Chartered accountants were controlling engineers. So the partners will finally share the profits. Engineer will be paid only salary. So with consulting. So the problem was engineers don't know words. Engineers don't know how to convert into words and numbers. Whereas CA knows how to take numbers and words, put them together and present. That's why we are king in consulting. So, but unfortunately, the Arthur Andersen did consulting service to them. Also, they were doing auditing to Enron. At one point in time, Enron had profits were getting down. So the MD of Enron told the partner of Arthur Andersen, I will cook up the books. You allow me to do it. So initially they might have thought everybody will be ethical initially. Then see the amounts are so huge. Yeah, the temptation is too much. So these fellows would have agreed. So all sorts of golmaal happened. But finally, audit something burst and the whole scandal came out. Then Enron collapsed. Along with that, Arthur Andersen's credibility also gone. Overnight, Arthur Andersen collapsed. The entire practice was gobbled up by another firm called Ernst & Young. And the consulting practice was hived off into a company now known as Accenture. You might have heard of that brand, Accenture. It's basically Andersen Consulting. Okay. So why I'm telling this? No, this led in US to the promulgation of a law known as Sarbanes-Oxley Act, popularly known as SOX. An equivalent of SOX is your 144 here. SOX impact here. So they are saying auditors should not render these services. SOX was a very powerful law. And we have imitated it in many places in our law. In the listing, clause 49 to the listing agreement, there you will find SOX impact. Appointment of removal of auditors for certain matters, you'll find reopening of accounts when there's a fraud. You'll find not only SOX impact, but also Satyam impact. And these are all knee-jerk reactions of the ministry for events that have already happened. So if you can remember seven of them, it will be great. This is directly or indirectly. See, what I don't see here is relative of a partner of a firm. In case the auditor is a firm, partners of the firm cannot render these services. But they are not mentioning relative of a partner. Whereas if it is an individual relative is included, here relative of a partner of the firm is not included. Which means if the firm is auditing, the relative of the partner can be a rendering these services. You got my point? Slight loophole there. Slight loophole. Now, appointment of auditors, quickly to take you through that, 1 or 2 points I want to give. See, appointment of auditors, you can look at it from 2 angles. First auditor, subsequent auditor. First auditor, if it is a government company, the first auditor will be appointed by the Controller and Auditor General of India within 60 days of incorporation or registration. In case the CAG does not, then the board of directors should appoint within the next 30 days. So 60 plus 30, 90. In case the board doesn't, then members within 60 days of each year. So 90 plus 60. You're having 150 days. That auditor will hold office until conclusion of first AGM. Thereafter, he'll be appointed for 5 years at a time. Remember, appointment of auditors is for 5 years at a time. For certain companies, there is compulsory rotation and cooling period. So once 5 years is over for an individual, 10 years is over for a firm, there will be a cooling period of another 5 years. He cannot be appointed. Okay. In the case of a non-government company, the board of directors will appoint the first auditors within 30 days. In case they do not, then members should appoint within 90 days. Okay, so total 120 days. This auditor will also hold office until the conclusion of first AGM. Conclusion, please note it. Auditor will be having life in conclusion, whereas directors who are retiring by rotation will retire at the opening of the meeting. When the meeting starts, director retires, but auditor will not, because by the end of the meeting, if you have not appointed a fresh or new auditor or reappointed the auditor, he'll be automatically continued. Because remember, this post of auditor can never be vacant. Remember our motto, Yayesha Supteshu Jagrati. We are always awake when others are asleep. Therefore, without an auditor, no company can be there. Okay, 1 minute also he cannot be there. Okay, so these are all simple questions. In case of subsequent auditors, if it's a government company, the Controller and Auditor General of India will appoint within 180 days of commencement of financial year, right? That man will hold office until conclusion of next AGM. For government company, 1 year at a time. Every year the CAG will make fresh appointment. Note it, your honors, for government company, 1 year. At the next AGM and conclusion, he will go. If he is reappointed, good. CAG may reappoint for 3 years, but every year it has to be renewed. It is not automatic. Whereas for a normal non-government company, at the first AGM, the members will either reappoint the first auditor or a new guy. That auditor who is appointed by the members, the first AGM, will hold office from conclusion of first AGM till conclusion of sixth AGM. So 5 years. Thereafter, if it is a firm, another 5 years you can appoint. Individual, if rotation applies, he cannot. If rotation does not apply, he can go on and on and on forever. No problem. There are many companies where we audit where there is no rotation. We have been auditors for 40 years, 25 years, 30 years, and all we have been. Rotation doesn't apply to them. They are below the radar. So this is the salient provisions. See, this is being a revision. Even you can ask general questions. The another 5 minutes is there for closing. Another 10 more minutes is there for closing. So, yeah, good, very good. Excellent. Excellent, Mr. Lokesh. Beautiful, sir. So, if you have any general questions also, you can put it up in the chat. Now, because the time is almost, 8:20. We have another. Yeah. Yes, Mr. Somesh Singh, I can see your query in the query pad. The cooling period is for 5 years. See, the cooling period is not only for the, firm in which is completing 5 years, but also any other firm which has common partner also cannot be appointed for those 5 years. Got it? So, 5 years, cooling period. There is these cases, rotation of auditor is there. All unlisted companies, listed company compulsory rotation. All unlisted companies having paid up share capital of rupees 10 crore or more. All private limited companies having paid up share capital of rupees 50 crore or more. All companies having paid up share capital, but having public borrowing of 50 crore or more. There should be compulsory rotation. Cooling off period is for 5 years. Once their term is over, 5 years or 10 years, 2 terms of 5 years, he cannot be appointed for, they can appoint another 5 years. Okay? Okay? An audit firm having a common partner or partners to the other audit firm whose tenure has expired shall not be appointed. So if there is a common partner, for example, see Ram, Rahim and Robert and company is a firm. Ram, Rahim is a common, Ram, Rahim and Robert. Robert is a common partner in Robert Associates. Now Ram, Rahim appointed as auditors in Rainbow Detergents, 2 consecutive 5 years over 2026 coming. Now, the company is saying, okay, Mr. Robert, you are Ram, Rahim, Robert. You are also having Robert Associate now. Because, believe me, when this provision was introduced for the first time in the 2014 law, companies went mad. Sir, there have been companies which are coming in this category where, as I told, we have been auditors for 40 years. My firm is 50-year-old firm. We have been auditors for 40 years now, and so on. So such people got upset. They're saying, Srikanth, without you, what we will do? I said, law is clear. Get out. You appoint somebody. Who will I appoint? I have trust in you. So I myself got some friend and I said, he will be your auditor for 5 years. I'm going by. No, you can't go. So they will break me. You be internal auditor. You do anything you want. You bill me. I'm not joking. That is the type of trust that auditors have in. See, not listed companies and all those fellows who are taking public money. Owner-driven companies who are having owner management, they rely on the auditor for everything. They use the company form as a vehicle, and they are not taking public money. I think where there is no public involvement, they can as well leave that. But no, they said these criteria are satisfied. So they were literally, and they were eagerly waiting for 5 years to get over. Immediately they reappointed our firm and said, another 10 years you'll be with me. Okay, like that. So why I'm telling this, not to boast, but to tell you, law thinks in one way, but world thinks in another way. That also shows the trust built over so many years by ethical behavior, by prudent and ethical advice given to the auditee. But a fraudulent auditor will go. They may not keep him even for 5 years normally. They might change him. Okay, if the man is an unethical man, he won't survive. He will be removed. But ethical people, but who decides who is ethical, who is unethical? No test. Only life is a test. Life well lived is a test of ethical. Okay. What is the point in being rich and having a Rolls-Royce car if at a certain age, like 50 plus, man goes to jail for unethical behavior? It's not a shame. Okay. Think like that, you will never be unethical. Okay. So now in this example, they want to appoint Robert. Sorry, no. Because common partner, Ram Rahim Robert. What he could have done is, he could have resigned from Robert and come here. Even that is not allowed, I think. In that case, he can't come. That firm cannot be appointed. Like that, rotation of auditors is there. And when this came now in 2014, immediately everybody got mad. They went CII, ASSOCHAM, they went and begged the MCA and said, please do something. Immediately, I cannot send these people away. They know too much about our company. Suddenly, new man comes, it will be nightmare on Elm Street. I can't handle it. So then the MCA agreed. They said, we'll give you 3 years grace period. So immediately, you need not remove this man. 3 years. Suppose he has already completed 10 years. The firm has completed 10 years. Then they will continue for another 3 years. So this came in 14 March, applicable to 14 March. So 15, 16, 17, up to 17 March, he can continue. If he has already completed 10 years, as on the date of announcement of the change. Otherwise, suppose he has completed only 7 years, then he has another 3 years of his own life. 7 plus 3, that firm can be appointed, continue for another 3 years, plus the 3 years grace. So 7 means 3 plus 3, 6. 3 years start normal, plus 3 years of grace. So if 2014 was when it applicable now, so 15, 16, 17, 18, 19, 20. So 7 years old auditor can go until 2020. Like that, whatever may be the balance period, now you add another 3 to it. Suppose I've completed 10 years, then where is balance period? 0. So 0 plus 3, 3. Another 3 years was given, 17. Then 17, all of us went away. Then all of us were eagerly waiting. Company also waiting, audit also waiting. Audit is doing something, he'll come and go. Statutory audit will go on, that will be somebody doing. But for all other intents and purposes, they will call me only for meeting. They will call me only for advice. Everything I'll be there. And whatever fee I was charging at that time, they paid me. Okay. Then waiting for 5 years to get over, immediately they will change. Come back, come. And then from 17. So 17, 18, 19, 20, 21, 22. So 22 March, bring Srikanth. So 20, from then onwards, gone. Now that period is going on. That bonanza period is going on. Again, everything will come to an end 10 years down the line. Chalti ka naam gaadi. What to do? Welcome to the world of MCA. beautiful, sir. You are all highly brilliant. I'm so proud of you. And I have covered to the best of my knowledge and abilities. I think most of it is good. Rotation we have seen. See, suppose the partner retires from the said firm and joins another firm. Such other firm also shall be ineligible. So all these brilliant ideas will be not possible. Casual vacancy, normally government company means CAG has to appoint or board within 30 days. Other than government company, if the casual vacancy is due to resignation, members have to approve within 3 months of recommendation by board. Members have to approve. Because when there is a resignation, you have to be very careful. Why did that auditor resign? See, the auditor pointed out some error or some serious fraud. Now the management wants to muzzle him and throw him out. So they're making him resign, forcing him by threatening him in some way. Therefore, he may, of course, I'm just joking. Normally, what happens is they will part ways. They will say, see, merely because an auditor is doing his job ethically, he cannot be threatened. You understand? Therefore, the law now says when the auditor is resigning, he will have to file ADT 3, wherein he can very clearly state why he is resigning. That power is with me. So they cannot force me to resign. Because I'll say, okay, boss, I'll resign. In my resignation letter, I'll put everything and I'll go. Is that okay for you? What to do? Then you correct your books, change your ways, become good, become decent human beings. I get the power to advise him. Earlier, I had no power. They removed, now but that I will thank the MCA. By this one view now of ADT 3, they have given me power now. They can't simply strangle me and say, get out. They can't threaten me. Okay. But one thing I'll tell you, from 2000 onwards, I have never taken on any company where I had the iota of doubt about the management's ethics. If I had the iota of doubt about the ethicality of the management, I will simply return the file. Threshold level, I'll get it. Why even go into this? Yeah, fellow is a rogue. Yeah, ultimately, he will behave like a rogue only. Why be auditor for a rogue? Rather, go for good people. They will also not trouble us. We will also, okay. What is earned by decent and ethical work, live with it. Be content. Why go for greedy and become subservient to these rogues? Think like that. You will never be unethical. Then all of us decide we will not compromise on our ethics. The world will be afraid of us as a profession. They will be afraid. When they say auditor, they will fear. They won't come and talk like this to us. Okay, this is how we have to prove our worth to the world. So in case of other than resignation, board can appoint within 30 days. But should in 30 days time you have to appoint. Auditor post cannot be vacant. Are you able to understand? Very important. So sort of we have reached the end of our journey on what shall I say, revisionary classes. Given the time constraints, I have covered important topics from exam point of view. Believe me, a student who attends this class or is watching this video is able to remember what I have told in the last 1 hour. Chances are you will get a question in the exam, write it and clear. Okay, wish you all the very best in your examination and looking forward to hearing news of your success. Goodbye. Thank you very much for your patient listening and supportive interaction.
भार्गव जी
हाँ खत्म हो गया जी. Thank you.
थैंक यू सर गुड नाइट